welcome to a brand new episode of Market Manthan powered by ZBiz.com. Well, my name is Shitajan, and today we have a very special guest with us, Vaibhav Agrawal, who is the founder and chief investment officer of Teji Mandi. Well, he has over a decade of experience in stock picking and generating index-beating returns. Under the mentorship of Mr. Ramdev Agrawal, Vaibhav has developed his distinct investment philosophy. Well, welcome to the show, Vaibhav.
Thank you, Shitij.
Right.
My pleasure.
Well, Vaibhav, I'm sure, December has been a roller coaster month for investors. We saw strong gains earlier in December and then, a sudden dip. And then again, we are finding some bit of stability, in the last month of the year 2021. So most probably, I think, we should be able to close the year with double-digit gains, at least from an equity point of view. But with the few risks arising based on the Fed, and there could be a liquidity crunch coming for the new year, that is the 2022. Where do you see markets headed in the next year?
Yeah, so I think Shitij, see, I think that India is sort of on a firm sort of an upcycle. I think after almost after 14, 15 years, there are various things coming together for India's sort of economic growth, and sort of India's coming out of a down cycle, which was obviously accelerated by the pandemic. And so I think that from a corporate profit point of view, from a GDP growth point of view, and even if you see a lot of the indicators like the corporate tax collections, GST, highway bills, etc. They're all pointing to sort of a very strong growth, right? So I think that in the end, markets follow corporate earnings, and in the last 6-7 years, we've seen Nifty EPS growth of only 4% annually. This should sort of increase to 15%, I think, in the next 4 to 5 years. I think that overall markets, the trajectory will be positive. Of course, we're hearing news about Omicron and
yes.
The Fed tapering and things like that. So I think those distractions will be there, and they could keep markets choppy. But I think all in all, the trajectory sort of should be firmly upwards.
Okay. So the pandemic seems to have redefined the way technology is used in stock picking or stock investing, you could say. So how's the trading and investment pattern changed in the last 12 to 18 months? At least what have you discovered on Teji Mandi platform?
So I think 2-3 things have happened. One, because of the eKYC, which which SEBI had allowed.
Right.
Because of that, there's been a huge proliferation in online platforms. So you've seen how some of the online platforms have just exploded in the last couple of years.
Right.
Also, I think what's happened is that there's been a lot of proliferation of digital content around investing and a lot of awareness. And people have because of the way markets did from April 2020 up until very recently, a lot of people have sort of made money. So I think that sort of increases the investor participation in the market.
Okay.
So I think retail has become a significant force. I think that's something that we all sort of realized in the pandemic.
Right.
And despite FI selling, I think the DI flow and retail flow sort of absorbed some of that shock. So I think that's sort of how things have changed.
Oh, definitely. I think retail investors have come out really strong, especially in the year 2020 and 2021. But they have actually, you could say, overshadowed foreign institutional investors. The flows have remained muted, at least for the equity market perspective, for the past 5 to 6 months on. So coming to from a FI perspective, do you see further further selling pressure to continue in the new year as well, or in the year 2022? Because there could be a possibility of money moving from a risky asset to a risk-free asset.
Right. So I think again, a lot of the selling that we are seeing is global emerging markets. I mean, like because of the Fed tapering and all of that.
True.
It's a typical thing that FIs withdraw money from emerging markets and put it back maybe into developed markets. But I think what we have to understand is that you look at any global strategist, or even if you analyze India globally, India is one of the very few economies of this size that has the kind of growth, and in a lot of sectors, the per capita consumption is very low, right? The penetration is very low. So there's a long runway, like for the next 10 to 15 years.
Okay.
And I think as I mentioned earlier, I think that there are several factors coming together for sort of India
Mm-hmm.
to go into an upcycle. So yes, there could be some temporarily like FIs could be withdrawing money,
Mm-hmm.
but I think eventually they will have to come to India if
Okay.
they are looking to sort of participate, because just like FIs put money into China and other sort of emerging economies, I think India is going to be the market to be in for the next 4 to 5 years. So I can't pinpoint when that time happens,
Right.
but at some point FIs will, look to join the party.
Right. So, but after probably a knee-jerk reaction, FI flows could probably stabilize, and we'll see probably some stability here in Indian markets. And after strong, back-to-back gains, especially in the year 2020 and 2021 for the equity market, should investors, pare down their expectations as well for the year 2022?
Yeah, so I think 2020 to 2021. I mean, I think we've seen a wild ride. I mean, like it's been a one-way ride, and a
Yes.
lot of people have made sort of very easy money, and so the difference between skill and luck has sort of become very hard to distinguish.
Right.
And in a lot of cases, some retail investors have done much better than even so very experienced fund managers. So I think 2022 is going to be about sort of having that stock selection process, having the sector allocation process. So I think that that's something that no, I don't think that making money would be as straightforward as say what it was in 2020 or in early 2021. So you would have to do more deep dive and more research. But yeah, I mean, I don't think that the party is over from a market perspective. I yet think there's a long way to go,
Right.
at least in specific sectors and specific stocks.
Well, the party is not over yet. That's the word coming from Vaibhav. But coming to sectors, so which sectors are likely to, hog limelight in the year 2022?
So I think one sector clearly for me is banking. I think credit growth this year has been muted. I mean, it had started picking up, but then again, because of the second wave, credit growth went to like I think a multi-decadal low of 5%,
Right.
and in November it was close to about 7%. So once credit growth picks up, and in a steady state basis, it has been close to 15-20%,
Sure.
even in a normal market or in a bull market. So I think once that picks up, I mean, markets should do very well. I mean, the banks should do very well. Even risk appetite of banks is now sort of increasing.
Okay.
A lot of corporates have also indicated their interest in sort of setting up capex and all of that. So wholesale credit growth also should sort of start picking up maybe in a few months from now. So large private sector banks I think would be good. I think the IT sector has obviously seen a re-rating, but I think there are two big tailwinds. One is that the demand upcycle is something that you're seeing like what you're seeing in the early 2000s. So after almost 15-20 years, we're seeing this kind of a demand upcycle. The second thing is I think the currency has been fluctuating a bit. So
Right.
a little bit of that rupee depreciating would again help this sort of a sector. And yeah, I think the third could be something which is more infrastructure and capex facing.
Okay.
Again, obviously, private sector banks benefit from that, but more specifically, maybe the large sort of ENC companies could benefit. So yeah, that would be three
Right.
sectors I would look at.
Perfect. So banks, IT, and infrastructures are likely to do well in the coming year. Another big trend for the year 2021 was the new age technology-driven businesses hitting D Street and raising money. What is the kind of fundraising you foresee for the year 2022? So, and more technology-driven companies likely to make their debut on the D Street?
Yeah, so I think definitely a lot of technology companies, seeing Zomato, seeing Nykaa, I mean, I think a lot of them are going to get inspired to sort of come to the market. But I think that, the thing with the private sector is that right now there's a lot of liquidity chasing sort of few deals.
Sure.
So that's why if you see a lot of the valuations, they're sort of actually quite exorbitant and in some cases disconnected from reality.
Okay.
And even the valuations that we're seeing of companies in the public markets, I mean, it doesn't leave any room for you to sort of make money as an investor. So while yes, there is a lot of narrative, a lot of hype, a lot of excitement around it.
True.
But once you cut through the earnings and even the put, I mean, even if you give an optimistic assumption for FY30, people are already baking in optimistic multiples on optimistic earnings assumptions of FY30, right? So,
Right.
so where does it sort of leave margin of error? So I think they are great companies, but they cannot be such great investments. Is what I think. And yeah, I mean, I think even like with the interest rates globally sort of going up,
Right.
I think if people don't have a long term sort of, if they don't have like a monetization model in place or a profitability model in place, such companies tend to sort of get hit harder in a rising interest rate environment. So at some point, I think that the froth will sort of reduce. I can't pinpoint when exactly,
Sure.
but yeah.
Right. And if you look at, some of the sectors which really did well in the year 2021, they were power, metals, and realty space. So what is the outlook for, or what is the trend that you foresee for the coming year, that is 2022?
So, realty, I think, is coming out of a decadal-long sort of consolidation. So, and interest rates are sort of quite benign. I think residential real estate is sort of seeing an uptick, at least in the metro city of that. So I think realty should continue to sort of do well. Power, I think, is again one sector where there's a lot of reform happening. There's a lot of move to renewable energy. And even a lot of the power transmission and distribution companies are also moving towards sort of solar energy and whatnot. So that sector also is some level of reform. So I think certain companies in that could also do well. I think metals is a tricky one because there are a lot of global factors which so like for example demand in China. That's one thing that we don't know, like how that's sort of going to shape up. So if that sort of starts shaping up well, we could maybe see metal prices again rebound. But there's also been a lot of logistics issues, right? A lot of supply side bottlenecks because of which these prices are. So liquidity is coming off, supply side bottlenecks are coming off. So I think metals is sort of a tricky one to try and sort of predict. But I think some of the ones which are facing industries like electric vehicles or alternative energy, I think if the end demand there is high, then you could see like metals like maybe copper, like very specific metals that sort of do well. But as a basket, it might be tough to make a call.
Right. And any top stocks that you have for the year 2022?
Yeah, so I think based on the sectors that I had mentioned, like for example, in banks, I think ICICI Bank is sort of again a very well known, very well understood. But again, that is a company that sort of, it's got a lot of drivers in place.
Sure.
I think amongst IT companies, I think HCL Tech, has again a strong deal pipeline and reasonable valuations, and should benefit from the move towards digitization, cloud, all of that. And I think amongst the infra companies, I think L&T sort of looks to be in pole position. So these would be three companies I would look at.
Right. And, after this, you could say a good double-digit year for retail investors. What would be your advice to retail investors for the year 2022? Any learnings or any recommendation that you want to probably give it to them?
Yeah, so I think one is I think 2022 would require a little more work than 2021 in terms of sort of doing your research and your due diligence. And if people, a lot of them are now sort of working full time or are back in the office. So if you don't have time to do your own research, please sort of go through a mutual fund or through advisory portfolios like Teji Mandi, because I think sort of people who do this on a full-time basis would obviously have a head start over people who are doing this on a part-time basis. So especially your sort of large chunk of your savings should put in with managers.
Duly noted. Well, thank you, Mr. Agrawal, for your insight on market. And that's all for now, but do stay logged on to zeebiz.com for more on news, business, and economy. Again, thank you so much for your time, Mr. Vaibhav Agrawal.